make just around $2,000 a day trading the easiest and simplest ICT strategy that I've ever seen. And this is the same strategy that took me from playing video games all day to making life-changing money, never having to work a job again, and buying my dream car all within a couple of years. So in this video, I'm gonna break down exactly how I use this strategy to finally become a consistent trader. And if you stick around and actually pay attention, you'll be able to skip years of mistakes and years of blowing your accounts. Now, before I get into anything, I just want to show you the P&L for my month this far using the strategy. As you see on the screen, just on Lucid alone, I've taken over 20K in payouts in the first 9 days. And this was our calendar for May. We only had 2 losing days the entire month. Now, this calendar is standardized for the trades we take on stream for risking $250. That's why the P&L looks so small, as well as you multiply that across however many accounts you trade. And even if you only risk $250 a trade, 10 accounts, you're up 15K. So I promise you, you're not going to find a better strategy out there that's as simple as this one. Let's actually go over it. Now, the strategy that I'm about to be showing you is called the sweep and inverse model. And the reason this strategy is so good, because if you're disciplined enough to actually sit on your hands and wait for the setup, you can take trades like this one. This is a trade that we actually took on stream, caught over 200 points. Now, I want to make this clear for you guys. Trading is not a get rich quick scheme. So many people come into it thinking that they are going to instantly make money, but no, that's not how it works. I lost so much money and blew so many accounts over the years. And the only reason that I was able to succeed is because I didn't focus on the money and I focused on becoming a better trader. And that's why I'm here to help you guys not make those mistakes that I did. So let me actually walk you through my 4-step entry list. Now let's talk about setting levels. This step is going to be the foundation of the entire strategy, because if you get this wrong, then everything else is cooked. I don't know about you guys, but it seemed like every single trade I entered when I first started, no matter how good it looked, just instantly went to my stop 10 seconds later. And that was the absolute worst feeling, because I got in my head, you know, is this even possible? Can I even do it? Until I finally realized I was just placing my levels wrong and I was not trading off of liquidity. So how do you actually find these key levels? Well, I'm going to tell you, there's 3 things that we look for: session highs and session lows, high time frame highs and lows, and high time frame gaps. And so for our highs and lows, we want to start on the 30-minute, hourly, and 4-hour for the high time frame ones. So as you see, we're on the 30-minute right here, and we're just going to mark out our highs and lows. We have one right here. We have this high up here. We have another little internal high right here that we're going to mark out. We have this low. And then we have this low down here. You know, people always ask, how far back, how far from the current price do you want to mark your levels? You just want to mark the relative ones, okay? Most days we're not going to have, you know, 3,000 point moves in one day. So I'm not going to come back to 28,000 and mark out this low. Now, if on open price just starts dumping, then I'll start looking left, looking in historically, what levels do we have? But for right now, before market open, this is what I'm going to be marking out. Okay, now we have 30 minute. Let's go to the hourly. The hourly correlates. Let's go to the 4-hour. 4-hour also correlates. Now let's go find our session highs and lows. So I usually go to the 5-minute for the session highs and lows. You see we have London high right here. It's already been marked out. Now, a lot of times your session highs and lows are going to just be correlating with your hourly highs and lows, but not always. So always make sure to mark them both out. But what you don't want to do is mark out levels that have already been ran through. Okay, say if the London low is here, but it's already been ran through right here, I'm not going to mark this level out because all this liquidity has already been taken. If there were any orders sitting at this level, they are gone. They don't matter anymore. Whoever had their stop there got filled already. So we're not going to be marking that out. Let's see. Then we have the Asia low. That also correlates. It's already lined up. The Asia high has already been ran, so we're not going to mark it. So that's it for our session highs and lows and high time frame highs and lows. Now let's go to gaps. Now for gaps, I do look on the 15-minute to see what we have. We do have one. We actually have multiple down here. I'm gonna mark this one out and just be conscious that there's one below us. And then we also have this one above us right here. Okay, let's go to the 1 hour. Okay, we actually do have this 1 hour gap. Now for gaps, another tip is if the gap has been fully wicked through, like right here, we don't mark it out anymore. Even though it has been inverse, we don't mark it out anymore. We don't use it. That liquidity is gone. Now, if a gap has been wicked through just a little bit, like right here, you see this wicks into it, but it didn't wick all the way through. When you mark the gap, you want to mark what is left of it, okay? And that is the hourly gap that you're going to be using. So we also have this gap right here. We're not gonna be marking out that one. be conscious that we have this another hourly resting down here. Let's go 4 hour. No real big 4 hour gaps. We've been chopping kind of on the 4 hour time frame. So now that you have your levels, we can move on to step 2, which is to wait for price to sweep one of these levels. Now, sweeping is basically just price coming to it and then rejecting out of it. And basically, all that is price come to one of these levels and then reject out of it. Now, we do this because these banks and these big institutions are going to have orders that they need to fill, and they are going to stop people, the retail traders, out of their orders that they have set at these levels. This is where people's stop losses are going to be placed, and that's where the liquidity is. That's going to be what moves the market. So let's go ahead and wait for price to sweep one of our levels. Okay, wow, we had a pretty aggressive Drake down. Okay, we've swept this. Obviously, we haven't got the rejection out of it, but you know, the sweep is just price coming to it, and then you're looking for the rejection out of it to know if it is a true sweep. Or we took sell side liquidity and we tapped into this hourly fair value gap. So this is exactly what we want to see. So now we can move on to step 3. Step 3 is going to be marking out a fair value gap that was created on the liquidity sweep. Now, oftentimes you can have these fair value gaps that are created on the 1, 2 minute, and 30 seconds simultaneously. So which one do you want to pick? Well, you want to pick the one that's going to give you the best entry. So right here, I'm going to come to the 30-second time frame. We don't really have any gaps put in yet. I'm going to wait. We come back up. We come back up. Okay, we're waiting. We've come all the way through this gap. So now we filled this gap. Okay, we have fully filled this hourly gap, and we have put in a 30-second gap right here. But if there was also one on the 1 minute, what you would want to do is take the one that gives you the best entry. So if the 30-second inverse is at 480, but the 1 minute inverse is at 60, and the 1 minute inverse is before the 30, you would take the 1 minute. You just want to take what's giving you the best RR. And for entries, we use a 30-second, 1 minute, 2 minute, and 3 minute time frame. So now that we have our fair value gap right here, I just want to see price aggressively inverse through it, show displacement, and show confirmation that we want to take the price higher after sweeping the liquidity. And that's actually step 4. So once you mark out this fair value gap, you want to see price displace through it. So let's see what happens. We go forwards 1. Okay, we didn't get it. Boom. We get it right here. We can go long, placing our stop at the swing low, and then our TP at the next draw on liquidity. Now, I usually leave a runner once we hit whatever, you know. This is the closest external draw on liquidity. I would scale out of my position all but one contract, and then I just trail it as it goes from there. But you see, you know, this trade was an absolute turbo mega banger. We just kept pumping all day long. Another thing that I want to show you guys is we went BE right here. You want to go BE at places that price can reject from. This is a little internal high inside of a 1 minute bearish fair value gap. I would TP1 here, also BE here. And so if price wants to come back down, I still secured some profits and I didn't lose any money. Now, what you want to make sure you have when you're taking trades like this is a clear draw on liquidity. Because if we came up first into this hourly gap and then came down and got this inverse, this would have been lower probability because we already took the buy side liquidity. Anyone that had their stops there overnight or had their stops there from the previous day has already been stopped out of their position. And then there's no more liquidity for the banks to take the price to try to extract capital. So ideally, you leave one draw on liquidity, manipulate to the other, and then you can target that one. Now, draws on liquidity are basically just the key levels that we marked out. You have unmitigated fair value gaps, which means fair value gaps haven't been tapped into. You have internal swing highs that you can use on the lower time frame for your first TPs. And then you have the higher time frames, which is going to be the external draws of the range, which is what we would target for our full TP. And this is the exact strategy that we taught to Chris, who just took a $30,000 payout on Apex. And we took Bert to get his first payout. And we also took my man Wizop, 2 years of trading and blowing hundreds of evals, and we finally got him his first payout after he learned this strategy. And we've taught this to so many other people inside the community that have used it to get payouts, as you see on the screen. So if you want me to give you more personalized help and learn the strategy more in depth from me in real time, then just click the top link in the description to join our community. Okay, so now that you understand the fundamentals of the strategy, I'm gonna go over some random examples using the strategy just to show you that it can be used any single day. All right, so we're here on March 16th. Let's mark out our highs and lows. We have the hourly high here. We have an hourly high here. We have an hourly low here. Another hourly low here. I'm gonna mark this out just because there is a tiny hourly fair value gap right there. We are inversing an hourly fair value gap. These draws look good to be hit. That's what I would say is, you know, the clear current draw on liquidity. We do have a 30-minute gap right here. We're gonna mark out. Okay. Don't see anything else. We can mark out these highs up here just in case price wants to really pump. 15-minute. We're inversing a 15-minute. We have a couple 15 minutes below us. Mark those out just because. We want to come tap into those. Sweep that little low right there. Get a continuation long out of it. Let's make sure we have our session highs and lows marked. London high here, already been tapped. See Asia low. Already got. This is technically the Tokyo low. Tokyo open low, Asia low right there. Okay. This looks good for our levels. I do have a tiny wick high right here that I'm just going to mark out. Because this might have been some news. But I'm not sure. But I'm going to mark it out anyways. Because if we want to sweep this, not reject, and then come up and just take this internal high and then get the setup out of it, I'd play that. But let's go a little minute time frame and let's sit on our hands and watch what happens. Okay, we're waiting. You know, you just want to sit here and wait, bro. You want to just sit here and wait. Nothing yet. We do have this gap right here. We have this clear wick that we put in for a draw on liquidity. We wicked through this gap, so I'm not really worried about that one anymore. We did take, see, we took this high right here. Why we always mark that out. Let's go forwards. Do we want to displace through this? Okay, we get a re-sweep now. I actually like that better. It would have been not great RR. I'm going to mark this gap out. I would take this if this inverse is... Okay, we got strong displacement through it. I would have entered this position. I don't care that that candle came up. Stop at the swing high. Here's another thing. Look at this. This is why I really like this. And why, you know, yes, this would be better confirmation because it's a gap that hasn't been wicked through. But look what we have below us. We have trend line liquidity. Now, don't get that confused with trend lines. That's completely different. Okay, trend line liquidity is also called a low resistance liquidity run when it gets ran. When price just kind of builds up like this, and then you put in these series of higher lows, people are going to be having their stops there. And so when the market wants to actually run it and take these stops, it is going to displace fast. If I'm going to be right on this trade, it's going to go fast. And oftentimes, that is the only time that I will tell you you can front run a gap, is when there is low resistance liquidity below, you're taking liquidity, and it just looks A+. Now, that is more of a discretionary thing, but it's something that I'm teaching you right here. So I would enter this trade right here, and I'm completely fine with whatever happens. Oh, stopped out. Man, stopped out. 35-point stop. But I'm not going to call it a day just yet. My rules are 2 trades, and I am done. This still looks really good. This liquidity still looks super good to get ran. So I'm going to mark out this gap again. And if this gets inversed, I would stab it again. 2 losses, and I'm off for the day. That's my rules. Okay, look, we got good displacement. This, to me, is telling me, okay, we want to go lower. We have this low resistance liquidity. This is what I was talking about with the front running the gap. This is the only time that I would say you could, because if this candle wants to Drake, it's going to Drake aggressively through this. Hopefully we don't get stopped out again, because then that would make me look really stupid. 50-point stop, not bad. We can have full TP down here. We can go BE once we take out one of these lows. See what happens. Oh, yes. Yes. Okay, I'm BE now. I have TP1. How many points are we up? 878. 50, a little over 50 points. Let's see. We're going to come back and get BE'd. I'd be trailing my stop probably. I would have TP2'd at this low. And boom, full TP. You see what I'm talking about? This is something that you were not going to learn in the video unless I did a live trade on. That's the only time that you want to front run this gap, is when you have this low resistance liquidity built up. When this gets ran, it's going to get ran. Okay, it's not going to take this low and then not take these lows. If the banks are trying to extract maximum amount of capital, they're going to take all those lows. They're going to take all the orders that are placed at that place. And there might even be a long setup off this. I wouldn't take it because I'm already done for the day. 2 trades a day is my thing. Let's see if this would have played out. Looks like it would have. Yeah. Liquidity sweep inside this gap. Inverse there. Mid RR. I've got the highest plan on TradingView, and I still can't get the 30 second for this date. I don't know why that is. A lot of times the 30 seconds is going to give you a better entry than the 1 minute is. So if there's a 30-second gap there, you can take that as well. And now you know my exact strategy that I use every single day. And again, if you want to join the community, it's the top link in the description. We live trade in there every day. We do classes weekly. We have courses teaching our strategy. We teach you risk management, psychology, giveaways, how to scale. So I hope to see you guys in there. And again, thank you for watching. And if you enjoyed and learned something, make sure to like, comment, and subscribe. I'll see you guys in the next one. Peace.